Ladies and gentlemen, good day, and welcome to Kaveri Seed Company's Q4 and FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Please note that this conference call will be recorded. Joining us today on this call is Mr. Mithun Chand, Executive Director. Before we begin, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. For a list of such consideration, please refer to the earnings presentation. I would now like to hand the call over to Mr. Mithun Chand. Over to you, sir.
Thank you. Good evening and welcome everyone to our Q4 Financial Year 25 earnings conference call. We hope you had a chance to review the presentation of our results, which is also available on our website. I would touch upon the operational financial performance of the company and then open the floor for the question and answer session. Financial Year 25 financial highlights. Revenue from operations was at 76.95 crore as compared to 80.54 crore in Q4 24. EBITDA was at minus 15.31 crore as compared to 10.72 crore. Net profit was at minus 30 crores as compared to 2.79 crores in Q4 Financial Year 24. Revenue from operations was at 1121.57 crores as compared to 1062.43 crores in Financial Year 24, grown by 5.57%. EBITDA was at 274.29 crores as compared to 270.43 crores in Financial Year 24, grown by 1.43%. Net profit was at 265.21 crore as compared to 293 crore in Financial Year 24. Cash on book stands at 556 crores in Financial Year 25 as against 443 crores in Financial Year 24. Major highlights: witnessed good growth rates across all over non-cotton segments like hybrid rice, selection rice, maize and vegetables. Volume growth across segments like bajra, hybrid rice, selection rice, maize and vegetables has resulted in proportionate higher realizations, which is very encouraging trend. PAT for the current year is down on account of one-time entry of interest of 8.85 crore on the loan given by the company to the employed trust and increasing employees cost of rupees 4.95 crore on account of increase in valuations of ESOPs given for employees and increase in depreciation of 5.68 crore due to recent addition of a new office. Revenue during Financial Year 24, Q4 Financial Year 25 was slightly down because of no one-time exports to government of Tanzania, but rupees 24 crores in Financial Year 25. Financial Year 24. Acquiring remaining 30% stake in distribution company Aditya Agritech Private Limited for rupees 23.60 crores to increase company stake to 100%. Some of the operational highlights: the contribution of new products to volumes of bajra was up from 64 to 74%. Hybrid rice volumes increased by 13% and revenues increased by 26%. Selection rice volumes increased by 22% and revenues increased by 39%. Maize volumes increased by 7% and revenues increased by 22%. Vegetable seed volumes increased by 3%, whereas revenues increased by 8%. Export sales stands at 22 crores in Financial Year 25 as compared to 66 crores in Financial Year 24. This decline is due to political unrest in Bangladesh and there was no one-time order from government of Tanzania. Volumes of non-cotton hybrids increased by 24% and revenues by 22%. Volumes of cotton hybrids decreased by 35% and revenues decreased by 27%. I would now open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Thank you very much for the opportunity. Am I clearly audible?
Yeah.
Yes.
Sir, congratulations. Sir, how are you seeing the upcoming season? The build-up on the balance sheet indicates that you guys are preparing for a fairly robust season. But I would like to understand your point of view. What are you seeing in the market, and how do you see the season panning out?
The season looks good for the coming year. Even the prediction for the monsoon is good. We might get monsoon on time. So the acreages at the present looks more or less stable. There's a little pressure on cotton acreages, but we see a very encouraging trend for maize coming up. And dry segments, it is slightly sideways, but it should be stable. In terms of our plans, we have built up inventory for a couple of reasons. One, we anticipate a good season. Second thing, as we were almost empty with the entire inventory, and it was really tough in terms to produce more in these tough times. So we had a strategy, wanted to maintain a buffer inventory. That's one of the reasons why we built up the inventory.
Understood, sir. So thank you very much. All the best, sir.
Thank you.
Thank you. The next question is from the line of Sanya Jain from Care PMS. Please go ahead. Hi, Sanya. You are unmuted. Can you speak?
Yeah, thank you for the opportunity. Actually, just two questions. What is the expectations for cotton portfolio in quarter one? And since our non-cotton portfolio has done very well in FY'25, what do we expect in FY'26 considering the high base?
Regarding cotton, last year we were down by close to 30% in terms of the volumes. And with the low base, we are pretty confident that we will grow in cotton this year, even though the acreages may not grow, but as a company, as a level, will grow with this base. And we are launching a couple of new hybrids, which we have tested last time. Those hybrids are also doing well. So as a cotton as a portfolio going forward looks very encouraging. And the other hand, non-cotton segment, we have already witnessed a good growth this year. Going forward, even with this high base, we can easily grow with the 12 to 15% growth in this non-cotton segment also.
Okay, got it. And what is the plan for the cash generated from operations?
As of now, we don't have much plans. We need to discuss and then come back once we have a concrete plan. As of now, we'll keep cash with us. This time we have seen, because we have built up the inventory, most of the cash is getting deployed there. Once we have the real cash, then we'll have a strategy and we'll let you know.
Okay, that's it from my side. Thank you.
Thank you. We'll take our next question from the line of Dhruv Saraf from Bowhead India Fund. Please go ahead.
Yeah, hi, Mithun sir. Just wanted to know about the cotton price hike that the government has announced, a 4% price hike this year. So is that commensurate with the cost increases that you have seen in the production of cotton, or how do you see this situation?
Yes, this time we have seen a huge increase in the cost of production. The government has increased only by 4%, but there's a lot of pressure in terms of the cost of production. Not only in cotton, but all other crops, we have seen a sharp rise in the production cost. And whereas in the other crops, we might be able to pass it on to the farmer. But in cotton, even though the prices have increased by 4%, it will be really difficult for us to pass it on because there's a lot of inventory in the system. We might be able to realize good figure in terms of the new hybrids, but whereas in the old hybrids, it may be a little bit difficult. But we are trying to push the realizations or try to pass it on at least some cost to the farmer. But only in the season we get to know.
Other questions, if you may allow. What was your R&D spend as a percentage of sales this year, and how is it likely to be in 2026?
Overall, both. Yeah. Sorry. Go on. Sorry.
And the second question was that you mentioned that inventory has gone up because you're keeping some buffer. I could not really exactly hear why this buffer, and is this structural, like, you would want to keep going forward higher inventory as a buffer because you had the experience last year of, non-availability of seats timely. So is that one should assume that inventory now, generally speaking, will be higher than what it used to be in the past as a percentage of revenues? Thank you.
Sorry? What was the last one?
Should we expect that inventory going forward, like this year, should on a structural basis, not like one-off basis, should be higher, as compared to it used to be in the past as a percentage of sales, the percentage of cost of production? Because you want to keep some buffer.
In terms of the R&D cost, the revenue, the recurring expenditure was close to 6.5%. If you add the fixed expenses altogether, it was in between 8 to 9% of our total sales. And in terms of the inventory, we have intentionally, strategically, we have built up the inventory. We will have some sort of a buffer stock as in some markets, as the production arrives very late in the first quarter or the last quarter of the financial year or the first quarter of the financial year. So we are missing some markets. So we want to build up those inventory levels, and going forward, it may not the sudden increase what we have seen this year may not be there going forward, but the inventory levels will be slightly usually higher than the previous years.
Thank you so much, sir.
Thank you. The next question is from the line of Abhas Verma from East Green Advisors. Please go ahead.
Sir, am I audible?
Yeah.
Yeah. So, sir, I had a question regarding your revenue growth guidance of 10 to 12% for the next 2 years that you had given earlier. So in one of your earlier con calls, you had mentioned that the cotton portfolio is expected to grow at around 15-20%, and the non-cotton portfolio at around 15% plus minus 2%.
Yes.
So given that, could you please help me reconcile how this translates into a lower consolidated growth guidance of 10 to 12%? So am I missing something here, or if you can
nothing. We were a bit conservative in giving the guidance, but by seeing the portfolio, you should be plus 15%. Non-cotton segment with a big base, 15 plus or minus 2%, that will continue. And cotton with the small base will grow this year. But when I gave a guidance of like 10 to 12% is for the next 3 to 5 years, not for just a year.
So do you still maintain that 10 to 12%, or we can expect something higher than that also? Like, is it conservative?
That's the minimum what we see. It should be better than that.
Okay. And just one more question. So when you are giving this 10 to 12%, does it include the export guidance of 160 crore as well? Or like, have you factored in that as well?
Export guidance of?
I mean, exports guidance in your earlier con calls, you had given around 160 crores something.
No, what I meant is that in the earlier call, I gave a guidance in the next 5 years. In the next 5 years, the export market can be 150 crores, and even in the same time, I've given the guidance of vegetables also close to 150 crores.
All right. So 10-12% is including everything. You have factored in everything into that, right?
Yes.
Okay. Thank you. That's it from my side, and all the best, sir.
Thank you. Participants, in order to ask a question, please press star 1 now. The next question is from the line of Krushi Parekh from Bugle Rock PMS. Please go ahead.
Yeah, hi. Krushi Parekh here from Bugle Rock PMS.
Hi.
I just want to understand, so we have this 40% jump in the inventory, and I understand there is buffer also. So one thing is that what proportion of this can be construed as buffer, and what is something that we would expect to be sold in this financial year itself? And also, can you give us some understanding on the mix in terms of cotton, non-cotton, and in the overall inventory, new products, old products, something like that?
So we have increased the inventory across all crops. It's not specific to one crop. We increased the inventory in cotton and non-cotton segments also. There will be close to 20 to 25% of the inventory as buffer stock across all crops, leaving some varieties. We have produced some varieties, moving hybrids, which are in large segment. We have produced more because we can always use it for the next year, wherein the discards will be very low. In those crops, we have increased our inventories significantly high. And in terms of the cotton also, the inventory is like last year it was very minimal. Now this time it will be like close to 6 to 7 million packets.
Okay. So, Mithun sir, if you can just give some understanding on what is the proportion of the new products that we have in the market now, and how are we approaching it against the competition? Because I believe last quarter you had mentioned that we don't have the products in terms of the yields and everything are pretty much similar to the competition also. But then how are we approaching to grow our products versus that of competition, and how are we looking to take on the competition this year?
It will be a bit difficult to explain about each market and each product suite we are doing, but I can give you the guidance like in the next 3 to 5 years, more than 50% of the revenue will be contributed by the new products. New products in the sense which are already placed in the market, which are already launched in the market for the last 1 or 2 years, and newly to be launched products. These will contribute to more than 50% of our revenue.
Okay. But any sense in terms of because how are our products differentiated versus that of competition that will be expecting the pickup in the market and grab some market share?
So there are so many variants to do that. Basically, end of the day, it all boils down to yield. But how do you arrive to yield is a different way. One is by stress conditions the hybrid need to perform. One like low pest, low diseases. So a different crop maturity date. So a different crop has got a different parameters to look on. So when we see a competitor's hybrid or when we want to increase the market share, we see that it should, in that given condition, in that given particular condition, our hybrid need to give better yield than the existing one, and the maintenance should be low. These are the two factors what we see.
Okay, and then we go on to educating the farmers about our differentiation.
Yeah, definitely. See, when we launch an hybrid, it should be tested in the farmer's field only. That's how we also create awareness program among farmers and show the difference between our hybrid and the competitor hybrid. That's how we increase the awareness and we create demand for that.
Okay. So typically this would be 1 to 2 year cycle, and then third.
Yeah, initially once you launch the hybrid, based on the base, it will take 1 to 3 years. Because we need to market in different areas. So as 2 to 3 years is the right time where you get the good visibility. First year will be very small.
Okay. And sorry, if I may just continue on this question. What proportion of our current products is something that is field tested and new in the given year?
Sorry, what is field?
What proportion of our inventory currently is new and is already tested over last 1 to 2 years across geographies?
More than 95% of the inventory, close to now, more than 95% of the inventory is the products which are moving hybrids. Because when we launch an hybrid, it will be very low. The quantity will be very minimum. Once we see the performance, then only we will increase the inventory. So that's what I said in the earlier way. The inventory what we have now, majority of the inventory is from the moving hybrids, which are already approved in the market.
Okay, great. Good to hear. Thank you. Thank you so much.
Thank you. The next question is from the line of Yashovardhan from Tiger Assets. Please go ahead.
Hello, sir. Thank you for the opportunity. So, wanted to understand what is the gross margin sustainability going ahead?
The margins should sustain. The margins this year were like gross margins this year was close to 46-47%. That should remain same in like 1-2% plus or minus, because this year we have high inventory costs, and in cotton we may not pass on. This year might be slightly stressed, but going forward there are pretty high chances that the gross margin should further go up, as we will be increasing in vegetables and other crops, bajra, which have high gross margins. Again, it should go up. This year slightly we need to check, only because of cotton.
Understood, sir. And so on the inventory front, how much are we expecting to be utilized in Q1?
Basically, if you see the trend, like 70% of our revenue comes in the first quarter. It's easy to take like first half and second half, because there might be some spillover sales based on the monsoon or aware of the monsoon. So first half contributes like 70-80% of our revenue. That will continue going forward.
So first half as in H1, right?
Yes, H1.
Okay.
And even in H1, the Q1 contributes a lot. But as I said, that there might be some spillover sales which we place in the market in the first quarter itself, but sometimes we recognize the sale in the second Q2, because if it is not liquidated, we don't recognize it as sale.
Understood, sir. So lastly, we've already spoken about the monsoon. We just wanted to understand if you can elaborate a bit on how the good monsoon will benefit us.
Good monsoon in the sense that if you get rainfall in time and it's widespread rain across country, then the season will be as anticipated. Otherwise, there might be a chance in the crop shifting.
Okay.
That might impact sales to some extent, but as a company, we are there in most of the crops. When compared to other companies, we have minimal risk in that. The risk is very minimal for us, because we are already there in most of the crops.
Understood, sir. Thank you. All the best.
Thank you. Participants who wish to ask questions may press star and 1 at this time. The next follow-up question is from the line of Dhruv Saraf from Bowhead India Fund. Please go ahead.
Yeah, Mithun sir, just wanted to understand some color on the Bangladesh business. So we've seen a big drop in exports this year. So do you think that business is gone for the next 1 or 2 years, or do you see it coming back?
It will come back. This year is a hit what we have taken. But that's the reason I said that it's not only Bangladesh which is coming up in the next 1 to 3 years. There are many other countries we have added upon. Like we are there in Africa and all the Southeast Asian countries. So with a consolidated way, it will go to 150 crores in the next 5 years. And this year we'll definitely see growth in these segments. Bangladesh will also pick up.
So sir, this year itself we'll see Bangladesh coming back?
Yeah. We can see that Bangladesh. No, last time there were a couple of reasons. One was a political issue. Second, there was a lot of inventory in the market in last year in Bangladesh markets, because before that the season was not that great. Now most of the inventories are down. The issue is also sorted out, and I think we can get back to those sales what we have done earlier. And in fact, we have better plans in Bangladesh going forward.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Kaveri from Moneybee. Please go ahead.
Acreages, you mentioned that we expect the cotton acreages to fall this year. So why is that, and why are we focusing on the cotton portfolio going forward in this year at least, if you're saying that the acreages are falling? So I just want to get some more color on that.
As a crop, cotton is not that lucrative when compared to other crops like maize. The MSPs of maize and the current trading, current market rate of maize is also pretty good. So people are slightly inclined towards maize this year. And whereas cotton, this crop shift is very natural in terms of agriculture, wherein some crops will do well and some crops will fall. But cotton as a crop, we can't neglect it. And going forward, cotton has also very good focus on it. And with the small base what we have, decent base what we have right now, we have good scope to increase market share. That's the reason we are focusing on cotton. And going forward, our focus will be on cotton as well.
Okay, that's it from my side. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Anurag Jain, who is an investor. Please go ahead.
Good afternoon, sir. Am I audible?
Yeah.
Good afternoon, sir. Basically, the Tata Group company, Rallis, in its conference call had mentioned that the entire seed industry is facing distribution challenges related to processing of seeds, packing of seeds, and sending seeds to the market. So is this something that is affecting Kaveri seeds also in the current season?
Not really, because we have most of the facilities are owned by our Kaveri itself, and we don't give much on what you say that we don't hire much of facilities from outside. It's all inbuilt facilities. We have faced this challenge earlier. That's the reason the strategical move we have done, that everything should be in-house, and we are having that in-house processing facility as of now. And for us, we don't see much of a challenge. It's not a major challenge for us to address.
Okay, sir. And sir, how is Kaveri placed in terms of capacities for processing seeds and packing seeds for the next 2-3 years? We already have the capacity to account for the growth for next 2-3 years, or Kaveri will need to do some capex for to enhance capacity for processing and packing?
At present, if you see India, we have got one of the largest and highest processing facilities what we have right now, both in terms of the processing facilities, in terms of the warehouses, in terms of the cold storages. We have one of the highest capacities and processing facilities. Right as of now, for the anticipated growth, we already have planned, and whatever new capacities or new lines, whatever we have built, we have made it compatible to add on. And that's a continuous activity to increase the facilities, but going forward, 20 to 30 crores per annum will be the capex for maintenance and addition of new plants.
All right, sir. Thank
Year-on-year.
Thank you. We'll take our next question from the line of Nilesh Doshi from Green Lantern Capital. Please go ahead.
Thanks for taking my question. So what was the sale of cotton?
Sorry to interrupt you, sir, but your voice is breaking. So.
Yeah, can you hear me now?
Yeah.
Yeah, what was the cotton seed sale last year, Mithun?
It was around 3.6 million packets.
And I think you mentioned in one of the answers that the inventory you have created is 6 to 7 million packets.
Yes.
Second is, can you just tell me the inventory of finished goods as of 31st March as a housekeeping?
I don't know the exact figure right now, but whatever is there, apart from the biological assets, which is shown in the balance sheet as of now, apart from everything is like stock which is already there in the plants. So there are different ways. We make it finished, ready to go to market only when we try to send it to the market. Otherwise, it's all stored in bulk seed at different levels.
And how much would be biological assets as of end of March?
It's like 200 crores. I don't have the figure right now in the presentation, but it's like 200 odd crores.
Anyway, I'll take it off.
I'll get back to you regarding that one.
Sure, yeah. Thank you so much.
Thank you. The next follow-up question is from the line of Dhruv Saraf from Bowhead India Fund. Please go ahead.
Mithun, just one clarification on the balance sheet. We see a CWIP of around 90 odd crores. This is despite you commissioning. We see a CWIP of 90 crores on March in the balance sheet.
Sorry, I'm missing you. What you are saying? 90?
Yeah, I'm talking about the capital work in progress, sir. That is there on the balance sheet as of March of 89 crores. So, what does the CWIP pertain to? Because you've already commissioned the biotech center.
No, one is we have set up new office space now. That is already commissioned. Some part is left out, and some godowns and some R&D centers we are building up. That is in the capital work in progress.
Okay, so that is over and above the biotech center you've already commissioned.
No, biotech is also part of it. Biotech we have not commissioned yet. It's in the process.
Okay, sure.
Thank you. Thank you, ladies and gentlemen. This was our last question. Thank you for joining the call. For any other information, please be in touch with Mr. Rama Naidu from Intellect PR on 9920209623. On behalf of Kaveri Seed Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.